back, and gives me immense pleasure to welcome Swarup again on Kuvera Insights. Swarup has been a big supporter of the industry, of the growth in direct plans and in platforms like us. Welcome Swarup again to Kuvera Insights. To just give a
Thank
quick background to Swarup again, he is the CEO of Mirae Asset Global Investments. He has over 24 years of experience in the field of financial services, including 17 years experience in management and sales. He's overall responsible for the India AMC and has been associated with Mirae as the head of sales since July 2011. Welcome, Swarup. And everyone, Mirae is a popular fund house on our platform. Everyone knows that you guys have had a very good journey in the past few years. Today, what we want to talk about is international investment. So let's start from the big picture. Why should Indians invest in international companies or in international securities?
At the outset, Gaurav, thank you so much for having me. Of course, it's been a huge learning working together, Kuvera and us, and this entire phase of this lockdown. We've learned a completely new dimension of how people like you are reshaping the distribution of mutual funds. So all power to you, and thank you so much for having me. See, investing per se is about your own life and how you perceive your own future, and that is how you invest, right? And then there comes a time when the need for diversification keeps on growing, and it's a very dynamic thing. And I believe global investing is a part of a diversification whose time has come on two things. One is, of course, where India is vis-a-vis the world. Second part, obviously, is as investors, we have also traveled a certain distance in our investing journey. And today we are mature enough to sort of inculcate a lot of new ideas and new data points to make our portfolio stronger. Primarily, when you look at our investing, I am a firm believer that the growth story of India is intact. But having said that, India is probably 3 or 4% of the world GDP and probably 3 or 4% of the global market cap. So the bulk of the investing market is actually outside India. And that's very difficult to sort of ignore. And that's something which is very fundamental. If the larger market is beyond your own domicile market, there is a merit of diversifying beyond the your country. That is at a very fundamental level. The next thing that comes into mind, which is combined together, is that it might seem like equity or capital markets per se, but the Indian markets have very little correlation with the global markets. I mean, hardly any correlation. Our markets have their own function because that's a factor of how our economy is at this present moment. And when you compare it to the other markets, they function in a very different way because of the stage of their economy and their markets, which are an outcome of their economy. So when you combine the two by diversifying outside India, you're actually adding a piece which is not part of what you have in your own markets. So that's a very fundamental sort of submission as to why the time has come to look at other countries to sort of invest.
Absolutely. I think we would 100% agree to that. Just to put some data ahead, US, if you look at MSCI Global World Index, US is about 66%, and India is, I think, about 3 to 4%, as so rightly mentioned. And same way, the correlation of Indian markets and US markets last time we calculated was in the low 30%. So there is a very significant diversification benefit you can get, even though you might think it's Indian equity and US equity. Just the word equity is common, but like Swarup said, they're very different markets and they move in very different rhythms, which is the whole underlying principle of diversification. So the next question then comes is, if you look at the broad spectrum of how an investor can invest globally, what are all the different choices they have, and what are some of the advantages, disadvantages that come to your mind quickly?
See, the way you invest is similar to the way you invest in an equity. You can actually invest directly, and today a lot of Indian stockbrokers give you that avenue of going and investing abroad. But then you are restricted to that framework of LRS, which is $2.5 lakh per individual. And it comes with its own KYC norms, which is the law of the land.
Right.
It's a little complicated. But the other part, from a retail perspective, sometimes, the stock price per stock is a little expensive. Let me give you an example. Say if you want to buy an Amazon, one stock of Amazon, it is around 2.5 lakh rupees, Indian rupees. So at a retail level, it looks easy to go and buy stocks abroad, but at a practical level, it is a little different to execute, or a little difficult to execute. The other part is to come through the mutual fund route, which, both the active modes are there in India as well as the passives are there. We believe that, and if you look at the US market in general, and you pick up the SPIVA report of after 2008 to 2020, for 11 consecutive years, the large cap funds have not beaten the benchmark there. And
Right.
hence people there are taking the passive route.
Right.
When you are investing through a fund route, I would really recommend that you take into consideration the cost of the vehicle you are investing in.
Very
Because
fair.
when the costs are significant in those markets, because the alpha generation is, because of the efficiencies of those markets, the alpha generation is so minimal. The more you can squeeze on the cost, the better will be your outcome. So that is something which people have to take into consideration. Even if it's the ETF, the cost of the ETF, if you are investing through a feeder fund, the cost of the overall feeder fund, or if you are investing through an active fund, the overall cost, that is something which you cannot dissociate in global investing at all.
That's a very good point. By the way, I'll repeat that last point again. If you're investing through a feeder fund, a lot of times they will only show you the expense ratio of the feeder fund and not of the underlying fund. So, which was Swarup's point, make sure that you add the two up to know the true expense ratio of that feeder fund. Is that right, Swarup?
Yes, absolutely.
So, but agreed, right? I think there is direct equity and there is investing through funds. Some of the things that I would also like to add two, three things. Direct equity gives you the freedom of investing in exactly the stocks that you want to invest in, but it also brings the burden of knowing which stocks you want to invest in. So it depends on what kind of an investor you are. If you are just investing following, tips, then maybe direct equity might look easy and obvious, but in the long run may not work out for you. But if you've done your work and if you are a very acute market follower and you know the 20 international stocks you want to buy, then direct equity might make sense. So there is that flexibility that it gives you. Having said that, we always caveat this by the same thing. Most investor portfolios underperform the index, whether it be your own self-selected basket of stocks or whether it be otherwise, which is kind of also what Swarup referred to as the SPIVA study. And on the other hand, the benefit you get with funds, which is the same thing in India also, all your rebalancing is tax-free. The entire decision making on what goes into portfolio is with professionals whose day job is to try and beat the market, right? Versus our day job is to be really good at what we do, which most people don't have investing as their primary job. So that's how I think international investing, like you rightly said, same balance comes in.
Yeah.
So
Gaurav,
what is the new thing that is happening? Sorry,
Gaurav,
yeah.
just to, because you touched upon a very interesting thing called rebalancing is tax-free.
Right.
The fundamental thing that I'd like to point out, and because I'm seeing that data in front of me, is this concept of profit booking when investing through mutual funds. You
Right.
actually hired a fund manager to do that for you. And when he does that for you, it's actually tax-free.
Right.
Right. You can profit book on your direct stocks, but I would really look at investors who think of profit booking on mutual funds to really rethink that whole thing, because of a very important thing which practically goes unnoticed is that when the fund does that for you, it is actually tax-free.
And when you do it in your direct equity, you have to pay what are the taxes associated. It is very, very true, right? And the same things apply international investing as well. So what are some of the new innovations you're seeing that are coming in this space? How do you see this space growing in India? We see this, and I can tell you from our platform, the demand for international is growing. It's growing for funds, it's growing for direct investment. Both of them are growing. I would say funds is growing faster because it's easier, less hassle, less friction. But both of this space is growing, and people are becoming more and more curious about different international vehicles that they can invest in.
Gaurav, it stems from just the flow of information, right? I
Exactly.
mean, information is so easily available. And then let's look at, I just reflected on a small part of the stages of the economy of different countries. Look at the difference between the stage of, say, India, which is an emerging economy, which is mostly, when you compare to the globe, is an old economy, right?
Right.
Our economy is built on the, say, the four platforms of, say, infrastructure, healthcare, banking, and probably consumption. While the economies abroad, or say US, these things are now done and dusted, right? And then they're talking about big data, they're talking about technology unfolding at a different level, they're talking about warehousing, gaming, and mostly industries which do not belong in India. And when we come to that stage, they'll be probably talking about something else. So that is why there is no correlation. And that is a realization which is sinking in very fast, that it is got nothing to do with market. It's just that you are able to accumulate other kind of stocks or industries which are currently or will for a long time not be existent in India.
Fair enough.
That is the biggest attraction. I mean, look at what all is floating across the world in stock, in fund ideas or stock ideas, and the IPOs that come in those parts. We just had our first gaming IPO. I mean, there in China, probably it's an established industry, right? If you were to talk about
Tencent started out as a gaming company.
Yes, I mean,
desktop
let's face
games,
it.
and now they do pretty much everything under the sun. But yeah.
Yeah, India is about low-cost labor and the intellectual part we bring to the table, but the rest of the technologies and the science you have to import from the rest of the world. Right? That is what probably India and China is. China is a little ahead of us on the other department, but fact is we are very different countries, and nothing is right, nothing is wrong. They're in a different stage, we are in a different stage. For an investor, it is very important to understand these different parts and form a portfolio which will be far more comprehensive in nature. And that is what the addition of various global countries do to your portfolio. And that's a realization which is sinking very fast, and which is the right thing to happen. It's for me as an individual also, it came very late. You can catch me in print saying that alpha generation in India is a perpetuality, India is a growth story. These things have changed in the last 4 or 5 years very suddenly for me as an individual too. And that's probably what is happening around us. So the opportunities are large, and I think the Indian mutual fund industry is also rising to the occasion. We've had a lot of global funds, both in the active as well as on the passive side, already there in the market and doing very well within Indian investors. We ourselves are coming up with a new story. This will be our first attempt at a global fund. So let's see how that unfolds. We are very excited to be at that threshold in India and to be participating in this kind of a market which is about to sort of expand at this moment from Mirae Asset.
I just want to highlight one thing, and a very good example of how an investor should be from Swarup. Right, as the data changes, you have to change your views, and you have to be humble about it. Right, very few people actually say things about when they were wrong, and Swarup is one of the few persons who has always been very, very transparent about it, about his learnings, and that's why I think I would think if there is one big learning, that should be that one big learning. If the data changes, you have to change your views. You can't continue with it, and there's nothing wrong in it. That's the whole point of an investing journey. No one is right all the time anyway, right? So I actually really
the
like
opportunity is gone. Opportunities never go. Opportunities are always there.
Yes.
So maybe I've missed a bulk of it. No, there'll be some other story which you will catch. But sooner you inculcate in your portfolio, better.
So there you have it, guys. That's Swarup, the CEO of Mirae Asset. In the first half of international investing, we covered a lot of topics. What is international investing? Why should Indians think about investing abroad? And what are the options available to them? We'll continue this conversation, talk about some more international investing options, and talk about a very interesting fund that Mirae has launched in the next episode. Thank you.